Hello, this is Paul Ahmed. I'm the Chief Investment Officer for BAI Capital, and I'm here today to answer some very typical questions we get from our EB-5 investors about investing in our project in Gainesville, Florida at the University of Florida called Archer Place. It is a mixed-use project that has student housing as well as condominium development and a little small piece of retail. And I'm going to give you some information about the financial impact of your investment as well as the returns to be expected, as well as how we're coming up with those returns, so that you can be fully aware of the investment and how that might fit into your overall investment strategy. These are the most typical questions we get. Of course, we're always available here to answer any further questions you might have. So the first common question we get is, how is the project being financed? The project is being financed with a combination of equity and a construction loan. The equity is going to be broken up into three parts. There'll be limited partner Series A, those are just private investors. Limited partner Series B, which is the EB-5 group of investors. And then the general partner also has money and we're putting money in the project. Then the last piece of it will be the construction loan. As an EB-5 investor, what is my position in the project? You will be a Series B fund that will consist of other EB-5 investors, and you will be a part of the ownership group. You'll have a percentage ownership group in the project, and you'll be allocated not only your return of 4.9%, which we'll talk about later, but also the potential for some profit, which again, we'll talk about later in the waterfall. Next, we're going to talk about returns and profit sharing. What returns can I expect? Based on pretty realistic and reasonable conservative assumptions, you're going to get your 4.9% return back, as well as your original equity amount. And then, there'll be a profit participation. All in all, the equity multiple, or the times the amount of money you're going to get back, is going to be around 1.64 for the EB-5 group of investors. That means for every dollar you're putting in, you're getting $1.65 back. And we think that provides a nice return, given that the way the waterfall works is you're going to get your money back first. How does the 4.9 return work? What is paid and under what conditions? Is paid really, it's essentially 7%, but of the 30% of that goes towards BAI Capital as an administrative fee to cover overhead costs, things of that nature, which means you'll get the remaining 7%, which is where we come up with a 4.9. And you'll get that money as soon as there's cash available, as soon as cash flow starts on the project, which should be around August, September of 2028, which is when it should be fully leased for the fall and the project is completed. And then of course, you'll get the money that's available when we sell the project, which is also expected in the fourth quarter of 2028. Beyond the fixed return, how do I participate in any profits? After your 4.9% and your original equity is paid, you will be part of a 45% ownership in the property, along with the Series A folks that we talked about earlier. And again, there's only a small amount, about 1.6 million right now, that's invested in the Series A. So relative to the whole capitalization, it's pretty small, but you'll get half of that, which would be 27.5%. So you have the chance to get the 4.9, your original investment, as well as a 27.5% profit participation, depending on what the profit is. Can you explain the waterfall distribution in simple terms? So we're projecting to sell the property for somewhere around $130 to $135 million. We take that $130 and $135 million, and the first thing we do is pay off the construction loan. We think the construction loan is going to be around $60 to $70 million. So that's going to leave us with, again, plus or minus $65 million of cash to distribute to the partnership. The first level that gets paid is the 4.9 to the Series A investors. The second is the 4.9 to the Series B or EB-5 investors. The third would be to the original investment for the Series A limited partners. The fourth would be paid to the EB-5 and their original investment. There's a 10% payment made to the BAI Capital GP group, again, as part of their overall costs and things associated with the project. After that, the rest of the cash flow will be split 55%, 45%. It'll be 45% to Series A and Series B, split 50-50. So 27.5% of what's left to Series A, 27.5% of what's paid to Series B, and then the last 55% will be paid to the general partner. So the general partner gets paid last. The project doesn't make as much money as we're hoping. You will get your money back first. You'll get some profit before the GP does. We think that's a good alignment of interest for the project overall. What if the return period extends beyond 3 years? Do I still get my 4.9%? Yes, you will get a 4.9% return regardless. There is a minimum 2-year hold period for your investment, but there's no maximum amount period. Again, we expect to be out in the fall of 28. If things go longer, as cash flow continues, you will get whatever is available up to the 4.9, up to your original investment, cash flow permitting. Can I take a condo instead of cash? Unfortunately, no. It requires two different transactions. So in this particular case, if you'd like to buy a condo, there's still some available, but we cannot do an exchange of the cash for the condo. Next, we're going to talk about exit strategy. What is the predicted value at the end of construction? It was about 130 to 135 million. Well, how are we coming up with that? Essentially, we're using some assumptions, which I'll get into in the next few questions. I mean, we're using a cap rate today is around 5%. We're using 5. We're hoping rates come down, which would lower the cap rate, but we think 5 is the fair cap rate given the current state of the market. And in fact, we did have an appraisal done on the smaller B4 building, and the appraiser did confirm the cap rates are around 5% right now for a property like this. How long must funds stay invested? For at least 2 years, as I said before, there is no maximum. If your expectation is you'd like to have the money out till fall of 28, that'll work perfectly because that's when we're anticipating selling the project. What assumptions are being used for rent levels and cap rates? Our assumptions are really based on today's market. We're not really using any assumptions that are extraordinary or we're hoping for. We're using an appraisal, we're using market data, we use a national database called College House, which is really the premier database for comparables all over the country for major student housing projects like ours. So, we're using market rents, we're using a vacancy factor of 5%, which is just kind of a minimum that everybody uses. We're using projected expenses based on a company called Asset Living, who's been working with us on this project. Asset Living is the largest student housing management company in the country. They have a number of projects in Gainesville. So we're using their numbers on what they think they'll need to run the property. So we're not just coming up with this on our own. We're having a professional, highly qualified firm tell us this is how we would run the property. We're trending taxes fully as if the project was stable. We're using today's insurance rates. We're using their payroll numbers, their management numbers, things of that nature. So all in, I think our numbers are extremely realistic. And when we come up with a net operating income, we're capping it at 5. And that's how we're coming up with our value, which again is based on today's cap rates. Again, not a number we're making up. And lastly, we're going to talk about risks and projections. What if the project fails or is delayed? The good news is your visa is safe. With the completion of building B4, which is the smallest of the buildings, it's only 20 units, it's 55 beds. We've already broken ground on that project. That'll be done by next July for leasing for the fall of 26. We would have created enough jobs for you to qualify for your visa or green card. So we think that's provides a safe haven for your money if the rest of the project doesn't do well. And again, we have no reason to think it's not. Once B4 is done, we've created the jobs. Are there any construction guarantees? How will cost overruns be handled? There are construction guarantees. That's going to be guaranteed by the principals here of the company, as well as our partner. You may have seen a recent announcement in LinkedIn and some of the other media that we post things that we've, within the last couple months, have formed a joint venture with a company called Adam America. Adam America is a large, vertically integrated real estate company in New York. They own 2,000 plus student housing units. They built 44 high-rises in Manhattan. They're highly qualified. They have a large balance sheet. They're going to help us lower our operating costs, our financing costs. So we think they're going to be a great partner for us. They're already helping us with giving us ideas on how to save money on the construction. And they'll be providing a guarantee. Any cost overruns are going to have to be borne by the investment group here, mostly from the GP. If there's available monies left over from limited partners, Series A or Series B, we'll use that. But ultimately, the responsibility for any cost overruns comes from the general partner. What risks are included in the EB-5 investment? Can I lose money? We certainly don't anticipate that. And the way we've set up the waterfall, we've made it so that you're going to get your money back very quickly. So there would have to be a real catastrophic event at the property from an income perspective, I think, for you to lose money. But is it possible? Yes, it is possible. But we think based on the presentation I've done here today, the materials we provided, hopefully you'll see that it's relatively risk-adjusted return versus the risk of losing money is a good value proposition. What cost beyond $800,000 should I expect to have to pay? primarily three different costs. The first will be the admin fee that BAI Capital charges. Currently, that fee is $70,000. That covers our overhead, our documentation fees, and things of that nature. Secondly would be your attorney. That's the attorney you use to get through this process. Usually that could be anywhere from $20,000 to $40,000, but that's really up to you and your attorney. And then UCIS has filing fees, and you expect those to be anywhere from $25,000 to $45,000. So those are the main fees that are involved in completing the EB-5 process. Again, thanks again for listening to this Q&A. Again, my name's Paul Ahmed. I'm the Chief Investment Officer at BAI Capital. We're located here in Aventura, Florida. If you have any further questions, I am always available. You can reach me, ask me any questions you want. We'll be as transparent and try to answer the best we possibly can. We hope you decide to invest with us and wish you the best of luck. Thank you.